Hey everybody, this is Trevor. I am going to quickly start the meeting here. We're going to be talking about why do we love investing in Texas. Appreciate everybody listening in. Again, this is an educational series. You must do all of your own due diligence before doing any real estate investing. So again, for myself, I'm part of Massive Capital, Vice President, Investor Engagement. I have been a limited partner in 20 syndications and a general partner now in 18 for a total of 38. Love to connect with you. Book a call. Again, Massive Capital. We're across all different things. We have about $210 million in assets, and we're partnered with Realty One that has about 300 million in assets. And again, you have to have massive dreams and take massive action. These are the founding partners of Massive Capital. Tonight, we're going to talk a little bit about how do you make money in syndications, understanding returns, and why do we love investing in Texas. So again, syndications are a way for people to invest into passive real estate, pool their money to be able to buy deals that are bigger than you would normally buy. How it works, sponsors, general partners, they're experienced real estate professionals who organize the syndication, secure the funding, and implement the business plan. We get passive investors, limited partners to join the project and fund the project, and they own a portion of the asset. Very simply, let's explain what does this mean. We're going to buy a $10 million property. The general partners will find the deal, make sure everything's okay, and they'll secure about a $7 million loan. So we need $3 more million to close the deal. We'll actually need more, but I want to keep the math simple. And so we will raise $3 million from our passive investors, LPs, and then they will own a portion of the asset. So again, 70% of the asset is bought by debt. The passive investors fund 30% of the asset, but they actually will own 70% of the asset. It's pretty amazing. So again, how does it work? We normally start our deals as a 506B, so I have to get to know you before I can offer it. We have to have a previous existing relationship. There are only 35 spots for non-accredited investors in a deal, so we like to give our massive capital community first access to the deal, and I can't generally solicit. So on these particular calls, I can't even talk about any 506B deals. You need to book a call with me so that you'll hear about them in advance. You can also invest as 506B if you're accredited, and you don't even need to verify your accreditation. Then we always switch our opportunities to a 506C, and they're available for accredited investors only. For an accredited investor, you must have $1 million in assets, excluding your home, or a personal income of 200,000, or a family income of 300,000. And for me, there are no restrictions on soliciting. So I can talk about them on these calls here. I can promote them all over social media. There are no restrictions. Just so you know, there is no difference between a 506B or a 506C, only who can invest and can I do some marketing. So again, if you're interested in making sure that you learn about our opportunities before they switch, and you're a non-accredited investor, and even if you're accredited, join my VIP waitlist where we will send you a sneak peek at all of our opportunities. So for example, you might have missed this particular opportunity. We closed this Class A assisted living asset before we even switched it to a 506C because we were able to raise all of the capital within 10 days from basically our VIP list. So again, don't miss out on our next opportunity. This one here, you can see it's a 2.3x of your money. It's a pretty good deal. So again, if you don't find a way to make money in your sleep, you will work until you die. So again, this is a very simplistic view. I've taken out taxes out of the scenario, but I've assumed you double your money every 5 years. And this is the power of passive investing where your money will compound. So you invest 100 and you grow it to 2. You take your original 100 and the 100 you made, you grow the 2 to 4, the 4 to 8, the 8 to 1.6, 1.6 to 3.2 million. Again, very simplified version of what happens, but it shows you the power of how your money can grow and why real estate creates so many millionaires. Don't miss out. You want to make sure that you hang out with us at the Massive Capital. All of our deals are brought by Massive Masters. If you hang out with successful people, they will brainwash you into believing you can and thinking you can achieve anything. And so again, we're going to quickly talk about the returns on an investment deal. A lot of folks are confused a little bit. My favorite is IRR. It's your internal rate of return, and it's the time value of money. And it's unique because it takes into factor the timing and magnitude of all cash flows. And it basically, the way it works is a dollar received sooner is worth more than a dollar received later. Again, a super powerful metric is the equity multiple. If you remember, I talked about 2x. So this basically talks about 2xing your money, but it doesn't necessarily talk about the time. The IRR takes the time into consideration. So you're going to want deals that roughly have an 18% IRR, a 2x multiple that kind of gives you an idea of what I believe to be a really good deal. Then there's some cash on cash. This is how much cash you will receive from the particular opportunity while you're holding the asset. Normally between 20 to 45% of your return comes into the form of cash flow, and then the rest comes when you get your asset sold and we liquidate it and we give you the profits from the sale. A preferred return is very powerful. So it's a priority share paid to investors, the LPs, before the sponsorship team earns any performance fees. So if you remember, I mentioned before that the passive investors own 70% and the general partners own 30%. So roughly speaking, we earn a dollar, 70 cents goes to the passive investor, 30 cents goes to us as the general partners. But we put in this investor first pref payment, which means until you make 7% on your money, there is no split for us and the general partners. So it's a way for us to put you first in line for the cash flow. And then afterwards, we share in the profits. And then an ARR is an average annual return. It basically takes the lifetime of the project and annualizes it out. So again, why is Texas a great place for commercial real estate investing? Well, Texas is attractive for commercial real estate because it combines fast population and job growth with pro-business, low-tax environments, and a diverse, resilient economy that keeps demand for space strong. Texas economy is experiencing rapid growth, boosting $1 trillion in GDP in 2024, the eighth largest in the world. It frequently outpaces the national growth rates driven by massive population immigration, diverse industrial base, and a pro-business climate. Texas leads the tech exports, semiconductor, and manufacturing and corporate relocations. And again, Texas is one of the longest or largest, strongest, most diverse states economies in the US, with major industries including technology, energy, healthcare, manufacturing, logistics, and military defense. Between 24 and late 2025, added about 132,000 jobs, record high labor force employment levels, signaling ongoing business expansion that supports office, industrial, and retail space. The economic diversity that reduces dependence on any single factor, helping the commercial market remain more resilient even during national turndowns. The rapid growth of Texas GDP, it grew at 6.8% annualized in Q2 of 2025, significantly outpacing the 3.8 average US rate. So again, Texas has experienced significant migration due to job opportunities, low cost of living, quality of life, which directly increases the demand for retail, office, and multifamily. Metroplexes like Dallas, Fort Worth, Austin, they are ranked among the leading in multifamily absorption, indicating a strong demand for rental housing tied to the population growth. Even where the new supply has been heavy, and this has been seen in Austin and San Antonio, a shrinking construction pipeline is expected to lead the existing units and spaces to get leased up supporting a gradual rent growth and occupancy stabilization. And again, we talked about it already, but Texas is widely regarded as a pro-business with lighter regulations and policies designed to attract corporate relocations and expansions. Texas has been named the best state by CEOs for 21 consecutive years and has won the Governor's Cup for the most business relocations and expansions for 14 years. That's pretty good. The absence of state income tax and various local incentives help draw both companies and workers, which in turn derives demand for all types of commercial properties. Investors also benefit from comparatively favorable legal and landlord-friendly frameworks, especially in the multifamily sector, therefore improving operating stability and returns. And again, Texas offers a melting pot of commercial opportunities, tech and education in Austin, energy and port-related industries in Houston, finance and corporate headquarters in Dallas and Fort Worth, and the military and healthcare based in San Antonio. This area is affectionately referred to as the Texas Triangle. I live in Austin, I live and breathe it, and I know it. The variety of investors lets you target different risk return profiles from stabilized core multifamily or industrial tier one metros to a higher yield development or value add projects growing the secondary markets such as Central Texas, which I already mentioned. The state is also seeing ongoing infrastructure investment into highways, ports, logistic corridors, which enhances the long-term value for industrial and distribution assets. Why does this translate into better returns? Strong job and population growth typically supports rent growth and occupancy, which are key drivers for income and appreciation in commercial properties. Texas combines the economic momentum, business-friendly policies, diversified demographics that has helped commercial real estate market to show notable sustainability and rebound capacity through past economic cycles. For an investor, that means a better chance of finding assets where income, appreciation, and exit liquidity are supported by real underlying demand rather than speculation. So again, given Texas's strong economic growth and diverse opportunities, how can investors strategically position themselves to take advantage of the evolving commercial real estate? Book a call with me. We can talk about it a little bit more. And again, if you don't believe it, check out Texas by the numbers. The number one US exporter for 22 years in a row. More than 15 million people moving to the state. 26 commercial airports, 19 seaports, 22 interstate highways, 35 foreign trade zones, 58 freight railroads, and 367 miles of coastline. Texas is the leading destination for corporate relocation and expansion products. Texas is home to 3.2 million small businesses. It is home to more than 50 Fortune 500 companies. Texas is the largest energy producing state in the nation. It's the number one job creator. In 2023, 326,700 jobs were created, and Texas led the nation in high-tech experts growth. So again, if you're interested in investing with Texas, reach out to me, book a call. You'll find the link on all of my marketing material. And I really appreciate everybody showing up for the webinar. I hope that you've learned something. We're super excited about investing in Texas. I will talk to you soon.